Honourable David Parker.
Prior speakers on behalf of the Labour Party have no doubt already said Labour will be supporting this bill to select committee. We're particularly pleased to see that the KiwiSaver provisions that were introduced by the last Labour government have led to an arrangement now being possible with the Australian government for the portability of savings under Australia superannuation schemes being brought back home to New Zealand in accordance and becoming KiwiSaver compliant schemes. I think it's interesting to reflect upon the divergence of the New Zealand and Australian economies in the last few decades, particularly given some of the, I think, simplistic analysis by the 2025 Commission, which was chaired, of course, by Dr. Don Brash. The big difference between New Zealand and Australia over the last 3 decades is their difference when it comes to saving. The Australians save well, New Zealanders do not. Australians have been saving for their retirement for decades, New Zealanders have not been. And indeed, if there's anyone who can speak authoritatively on that issue in this House, I would have to say Sir Roger Douglas. Sir Roger introduced into this House in 1972, I think it was, from talking to him recently, I had to check with him for the exact date, a private member's bill when he was in opposition at that stage in the then Labour Party in 1972 to introduce compulsory superannuation savings in New Zealand. The next time, and it wasn't long thereafter, that a Labour government was elected, and that Labour government introduced, again using the model that Sir Roger Douglas had developed, compulsory superannuation savings in New Zealand. And that then was used by the National Party under the Right Honourable Sir Robert Muldoon as the cornerstone of their campaign against the Labour Party at the following election. And he did a couple of things that were terrible. Remember the Reds Under the Beds cartoons, or the Dancing Cossacks, I should say, cartoons, and the talks of Reds Under the Bed that the whole of New Zealand was, according to Sir Robert Muldoon and the national government, then going to end up owned by the superannuation scheme, and that therefore it was a bad thing to do. They promised that if they were re-elected, they would axe the scheme and they'd give everyone the money back. And indeed, Sir Robert Muldoon encouraged people to stop making contributions to the superannuation scheme, despite the fact that the law remained on the books of the country, and as a consequence was taken to court successfully in what is still a notable case, Fitzgerald and Muldoon, where Mr Fitzgerald took the Prime Minister of New Zealand to court for ignoring the laws of this land and telling people that they didn't have to comply with the requirements for compulsory superannuation. And so that is where the big difference has arisen between the fortunes of Australia and New Zealand. For the 3 decades since, we haven't had settled superannuation policy on any long-term and durable basis, and we as New Zealanders have not saved enough. We've spent too much, and we haven't saved enough. The most recent reoccurrence of this terrible trend in New Zealand of national governments to underwind the positive moves towards better provision for long-term savings, superannuation, and also investment capital for new enterprises in New Zealand, or expanding enterprises in New Zealand, is of course the current government. And the current government has of course relied upon KiwiSaver in order to achieve the advances that are referred to in this bill in terms of the portability of superannuation from Australia into New Zealand, which would not have occurred but for the KiwiSaver scheme. The KiwiSaver scheme is sufficiently similar to the Australian scheme that the Australians have been convinced that there should be portability and that those schemes, the superannuation savings under Australian schemes, should be able to be converted into KiwiSaver. But of course KiwiSaver in itself is less effective than it was. The savings deficit in New Zealand is significant. New Zealanders need to save a lot more. KiwiSaver had significant tax credits to employers which eased the transition for them into contributing to the savings of their employers, because the employer got a contribution by way of a tax credit to the amount that they were spending on their employees' savings. The employee was required in response to save 4% of their earnings. The inducements to the employee included tax benefits to the employee. So through the combination of the tax credit to the employer, the tax benefit to the employee, we had droves of New Zealanders beginning to save 4% of their income plus 4% being matched by their employer over time. That has been halved by the current government, and in doing so the current government also removed the tax credit to employers, so the employer, if the employer is now contributing, it's at a real cost to them, and there will be less encouragement of employers to employees to begin saving for their retirement and to reversing the long-term trend in New Zealand of insufficient savings. That, Mr. Speaker, insufficient savings shows up most transparently in our current account deficit. Year by year, New Zealand gets poorer as we sell more of ourselves to overseas lenders. That's essentially what a current account deficit does, except to the extent that the additional capital that's coming into the country goes into productive investment. The rest of it is consumed, and in New Zealand the majority of it is consumed, and as a country we get poorer and poorer to the extent of our current account deficit, which is largely consumed. That reflects the fact that we spend more than we earn, we do not save enough, and as a consequence our country gets poorer and poorer year by year. And although the government has been saying that they will reverse that and that they're going to cause the next round of economic growth in New Zealand to be in the productive export sector, tradable sector, be it primary produce or manufactured goods or services, the reality that is occurring is different. The growth that we are now starting to see in New Zealand is actually the reinflation of the Auckland property market. We are seeing an increase in residential housing activity, and we are not seeing the increase in export-related investment that we need to cure our current account deficit, and in part that is because we do not have the competitive investment capital available to our businesses at competitive international rates. In part it's because we have a volatile exchange rate. Neither of those issues are fixed by this legislation, but we will nonetheless support it to Select Committee because it is good that we at last have some vestige of savings policy in New Zealand through KiwiSaver that is being recognised by the Australian government as being sufficiently good to allow reciprocity or conversion of Australian-based superannuation into New Zealand schemes. There are other changes that are made to this bill that are supported by the opposition, and indeed I think we did some of the preliminary work that under then Honourable Peter Dunn, who held the same role in the prior government, relating to gifts to charities and the removal of gift duty consequences for larger gifts to charities. That seems to be a desirable thing to do as well. In closing, sir, we do support this to Select Committee, but we do lament the fact that KiwiSaver is not as good as it could be. Thank you.